I've pulled up the latest polling, the French election tracker on the Bloomberg, BTV 6963 if you want to get hold of this. And this shows, Le Pen and Macron out front as they have been during the campaign, but that gap was closed at the beginning of this year to some extent by Fillon and Mélenchon. You think the markets are not nervous enough about this election. Why so?
When we look at the polls, they have definitely converged, and we're not far from the margin of error from all four candidates. Moreover, the share of undecided voters is still very high. So anything can happen after the first round. Now, when we look at what the FX market is pricing, euro-dollar risk reversal is at the lowest level since 2012. However, this reflects hedging of long positions. When we look at the flows this year, hedge funds and real money are long euro-dollar. Euro-dollar has gone nowhere this year because officials, central banks, sovereign funds, and corporates have been selling euro-dollar. So although when you look at the overall euro-dollar positioning, it doesn't look stretched, investors are long euro-dollar despite the risk ahead of the French elections.
I have that, Thanos, I have that risk reversal chart. Actually, Guy Johnson was using it earlier, so I just jaked it from him. #BTV 7841. Any of our Bloomberg clients can get into the BTV library and take this chart. Actually, the lowest since 2011. Where do you think this chart should be if you want to show some kind of fear, some kind of risk of aversion in these markets?
Well, this specific chart is where it should be, but to a large extent reflects hedging of equity positioning as well. When we look at positions into equity markets so far this year, the strongest flow has been in the Eurozone. So the market basically does not expect a negative outcome from the French elections. It might be right, but the risks are very high. We believe the risks are also asymmetric. For example, if we get a positive scenario, Macron winning in France, euro-dollar can go at 110 at most. This will be consistent with the data fundamentals. However, if we get a Le Pen or a Mélenchon scenario, euro-dollar can go to parity or even lower. If the market starts pricing Frexit risks, euro-dollar can go as low as 0.90, which is consistent with the move we saw in sterling after the Brexit referendum.
And as we build up to the first round, then, when do we start to get these kind of moves coming in, if they are going to happen then, Thanos? I guess it depends whether Le Pen makes it into the second round. Do you think that if she makes it into the second round, we see some of this extreme... Well, she probably will make it into the second round. So when do we start to get that extreme movement? We have to wait until after those second round results, or do we get something before then?
It could be between the two rounds. If Le Pen... makes it to the second round, and if she does in the first round, better than what the polls suggest. Or if Mélenchon makes it to the second round, because although Mélenchon is not directly against the Eurozone, many of his policies are inconsistent with Eurozone membership.
I spoke to one investor yesterday who said, well, they were actually on the opposite side of things from you, and they were a little more relaxed, perhaps, about the outcome. And they were saying that actually Le Pen would have to get something in the 40% range in the first round for him to be really worried about her prospects in the second round. What are the worrying numbers for you?
Well, it depends. I mean, in all the polls, Le Pen is well below for the second round. If she does, however, better in the first round, it depends how much better, then her chances for the second round could increase. It also depends who she's running against. Against Macron, she's about 20 percentage points behind. However, if she's to run against Mélenchon or against Fillon, her chances are better.